Good morning, ladies and gentlemen. Today, I would like to begin by discussing and sharing my framework for investing, how I'm thinking about the markets and the world at large. So first things first, I believe that in order to be a much better investor, you need to understand global trends, right? Why is this very important? Because if we can understand global trends, we can understand the emotions that are caused by these trends. And if we can understand the emotions caused by these trends, we can try to predict and hypothesize about the behavior caused by these emotions. Stepping aside a little bit, it's also important to understand the cycles, whether it's macro and liquidity cycles or cycles pertaining to your particular industry, such as crypto cycles. Once you've figured out the trends, emotions, and behaviors, it's important to choose the right asset class that is likely to benefit from said behaviors. And ultimately, you need to select the right assets from within the asset class. Finally, it's important to choose an asset where you can also contribute. I believe that we're entering an era which I increasingly call participatory investing, which is essentially people are not only just passively buying and holding a particular asset, but they're actually personally contributing towards that asset's success. Now, you know that the asset class that I'm personally focused on is crypto. This is what this channel is going to be focused on. I'm a big believer in staying within your circle of competence, so to speak. In our last video, we have talked extensively about asset selection, right? In our video on how to find a 100x winner in crypto. Today, we're going to be talking about the bottom pillar of this framework, understanding global trends. So without further ado, 47 of the most important technological, economic, social, and cultural trends of our generation, and how you can benefit from them. Now, first and foremost, in order to invest successfully, I believe you need to be very much aware of the social and macro trends that are defining our current era. And specifically, it's important to understand whether the trend is reversing or whether it's likely to persist. Ultimately, you want the trends to act as tailwinds to your investments rather than having your investments fighting an uphill battle against the trends. And again, for the trends that we're going to discuss, we're going to try to figure out, is this trend peaking or is it continue to persist? So first things first, you cannot talk about trends without mentioning AI. AI, automation, agents, and robotics are obviously going to revolutionize our lives in the next decade. AI is consistently getting better at almost everything, and it's on the verge of performing its own software engineering, mathematics, and biology research. Whether it's 2028 or 2031, sooner or later, it's coming for tens, if not hundreds of millions of jobs. In recent years, employment has been stalling. And what's worst of all, it's affecting young people disproportionately. Whether it's the United States or China or Europe, youth unemployment is higher than unemployment overall. And if we're on the verge of weak AGI and automation, then again, tens or hundreds of millions of jobs are at risk. And this issue is going to become even more pronounced in the coming years. In the grand scheme of things, and I'm talking about decades, it's important to understand that our current generation is in the period of world's history where the world's economy is growing at a slower rate compared to our parents and our grandparents. They were growing up in a world which was growing at 5-6%. Now, we are living in a world which is growing at 2%. And it's very important because I believe that the rate of economic growth really defines one's life and has tremendous influences on the way your youth, your adult years, and frankly, your existence overall is going to be felt. And we can see on this chart that with every passing generation, the average rate of growth is becoming slower and slower. All of this is happening while government deficits have been climbing over the past several decades. Again, this is not only happening in the United States, it's happening all over the world. And relatedly, we are witnessing continuously rising global debt as well. Debt is rising overall, all over the world. It's rising in the United States. It's rising in the G7 countries. And also relatedly, all of this is happening while money supply is also growing around the world. Whether you're measuring United States M2, whether you're measuring global M2, Whether you're measuring global M3, money supply is growing. Money supply in China is growing even faster than in America. There's currently twice as much money in terms of M2 in China as there is in the United States. And the rate of money supply growth in India is even faster. I strongly believe this is contributing to our next trend that we're going to discuss, which is income inequality and wealth inequality. And frankly, I believe that this is going to be the single most acute and the single most important issue over the next 20 years. In the United States alone, income inequality has returned to Great Gatsby levels. Most of growth, most of economic innovation, it has benefited the top 1%, the top 5% disproportionately compared to the bottom 80, 90%. Again, whether you're measuring income, whether you're measuring wealth, both incomes and wealth of the top 1, top 5, top 10% have grown significantly faster than those of the bottom 90%. And this has become even more pronounced after COVID. Even if you measure the years between 2021 and 2025, these gaps continue increasing every year. On previous charts, we've shown income inequality. Wealth inequality, in my opinion, is even more pronounced. The overall wealth of the bottom 90% is down in the last 30 years, while the wealth of top 10% and top 1% are steadily increasing. The ultra wealthy own half of the stock market. The rich have become almost 3 times richer in the last 30 years, while the bottom 40% has actually become poorer. And interestingly, the top 1% own more than half of all the stocks, while the bottom 90% own all of the debt. Real estate, similar issue. The older generations own almost all of it, while millennials, let alone Gen Z, are currently holding very little. And you can see here on this chart, the top 1% US household wealth continues to climb, while the bottom 50% has been flat over the past 35 years. The wealth of the top 1% is currently bigger than the wealth of the entire middle class. And if you thought the situation was bad in the Western world, it's even more extreme in second and third world countries. Research has shown that it's getting increasingly difficult for Americans to break into the middle class. Of course, all of these things are leading to inflation. You can't talk about trends without talking about inflation. You can see that since the global financial crisis, the average level of inflation has been steadily rising. It's obvious that the current generation is going to be living in a more inflationary world compared to their parents. And this is if we take government statistics at face value. There are alternative measures of inflation which believe that most of the inflation numbers have been understated and the real numbers are actually much higher. Furthermore, research is projecting that inflation is going to rise in the coming years. Now, monetary inflation is only one kind of inflation. We must also talk about shrinkflation, which functionally is another form of inflationary pressure. I'm sure many of you have noticed that products are becoming smaller while becoming more expensive. Every couple of years, there's less chocolate in chocolate bars, there is less shampoo in your shampoo bottles. Fast food items are becoming smaller as well. And many people have talked about this. What's interesting is that not only are things becoming more expensive, but they're also becoming smaller. We're also witnessing what people are referring to as refinement culture or hyper-optimization culture. The design of everything is becoming extremely homogeneous. Everything is becoming the same. Everything is becoming soulless. Some smart people have hypothesized that the reason, for example, why fast food architecture is so postmodernist, brutalist, and soulless is because it's much easier for those buildings to be resold later on. Classic private equity techniques. Not only architecture, people are becoming very homogeneous as well. I think this is because algorithms are increasingly driving culture and people are mimetically trying to mimic each other. And so people's personalities, people's looks, people's bodies, and I would even argue people's souls are becoming very much homogeneous and very much soulless. Essentially, corporations and algorithms are optimizing for the lowest common denominator, so to speak. Food prices are continuously rising. The price of beef are climbing every year. They're telling us that inflation is only 3%. But we can see, even in fast food prices, that it's likely much, much higher than the numbers that they're giving us. Again, this is affecting food, it's affecting real estate, it's affecting everything. And again, we can see on this chart that the price of all groceries are up significantly since 2019. Importantly, home prices, they're climbing year after year. You can see this in the United States, you can see this all over the world, you can see this in the UK, you can see this in Australia. And obviously, as the prices of real estate are increasing, the price of rent are increasing also. In the last several decades, the median monthly rents have skyrocketed. What's even more important is actually the gap between home prices and wages. That gap has been climbing steadily over the past 40, 50 years. Essentially, home prices, just like the prices of most assets, have been climbing almost every year, while wages have been flat. And essentially, this makes the American dream increasingly out of reach, especially for young people. Again, this isn't purely an American issue. You can see this in, not just even in the Western world, you can see this all over the world. This is why, a lot of people say I'm crazy when I say that in many ways, lives of the younger generation are harder than the lives of their parents and grandparents. And people say, the life of an average lower middle class person today is better than the life of a king 2,000 years ago. You have hygiene, you have civilization, you have sewage, you have everything. But people need to understand that human brain and human well-being, it's not about absolute wealth levels. It's about relative social standing. It's about dominance hierarchies. It's about where you stand in your village. It's about whether you can start a family. And when you're talking about family formation, as you'll see in future slides, when you're talking about home ownership, a lot of these things are becoming increasingly out of reach. This isn't only about house prices. All asset prices are up in the last several decades. And young people increasingly ask themselves, are they priced out of these assets? Are they buying a generational top? It's unclear. And you should also ask yourself, to what extent the stock market performance has been simply driven by the money printer? Tad Smith, a former finance professor at NYU, he recently said on a podcast, I didn't realize that if the average year money grows at 10% and the average return of the S&P is at 9%, then all of the value created there is the money printer, right? So we need to think what percentage of stock market growth is due to real innovation and what percentage is simply the stock market adjusting to the constant money printing all over the world. And if you actually put the S&P 500 and the global M2 money supply side by side, you can see how extremely correlated they are. The world is also more competitive than it has ever been. The number of open job positions is down significantly since 2022, while more and more people are competing for each available job. What's interesting is that in previous decades, you used to compete against your town, you used to compete against your state, but now you're essentially competing against the entire world, especially as far as digital jobs are concerned. We're also, depending on who you ask, are witnessing a wave of deglobalization. A lot of data is pointing out to the fact that 2010, 2012 is when globalization has peaked. Ever since then, we're witnessing a period which some economists have been referring to as slowbalization. And essentially, the share of total global trade value to world GDP has been growing at much slower rates compared to 70s, 80s, 90s, and zeros. An important trend to talk about is hyperfinancialization, especially in the case of the Western economies. Financialization took off in the 1980s as unlimited credit for financiers enabled a synthetic boom of corporate takeovers and mergers. Financialization expanded into every nook and cranny of the economy in the 90s and 2000s, so that assets such as family home became commoditized assets that could be sold as securities to global capital. I would like to share a couple more charts on this topic. The SPX, as measured in average hourly wages, is up parabolically since the 1970s. Essentially, Wall Street's gains have outpaced Main Street's wages by a staggering margin. Similarly, you will see similar results if you compare SPX to personal incomes. If wages had kept pace, the average hourly wage would be over 230 hours. Again, we're seeing the exact same thing. People that own stocks benefited tremendously from the past several decades wave of hyperfinancialization, while the bottom 70, bottom 80, bottom 90% did not get to benefit from from this economic growth. Similarly, if you measure the stock market in terms of GDP, it's up parabolically also. Ultimately, shares of gross domestic income, as measured in terms of compensation of employees, is down in the past half a century. The top 10% of Americans now account for over half of all consumer spending. Peter Turchin, one of the greatest demographic researchers of current era, in my opinion, has a theory which he calls elite overproduction. Essentially, we have more people with elite credentials than there are elite jobs to satisfy them all. His theory, after studying thousands of years of various human civilizations, is that when the number of so-called elites outpace the number of jobs that are available to them, it usually leads to periods of great dissatisfaction and instability. You can see attorneys as a percentage of US population are up significantly. This is an issue both in the United States and in China, where youth unemployment is higher than overall levels of unemployment. Student loans have been increasing consistently over the past 20 years. 40% of the United States population now has a bachelor's degree. A lot of these people originally went to colleges in hopes of an upper middle class lifestyle, but there are probably not enough upper middle class jobs to go around for everybody. Probably a top 3 trend that will be most heavily discussed in the next 10-15 years as well. And that's what I call great power conflict. We're essentially on the verge of the next Cold War, with the United States on one side and China on the other. Again, as we've previously discussed, it appears that globalization has peaked in the early 2010s and has since been on the decline. The recent tariff wars are only exacerbating the situation. And the important takeaway here is that wars, and even Cold Wars, they are inflationary. Most of the trends, in fact, that we've discussed so far are inflationary. The competition between the United States and China are heating up, not only on the trade front, but of course also on the front of AI. This is going to be one of the most pronounced arenas of competition in the coming decade. Switching back to more short and medium term, even more rate cuts are expected by the Federal Reserve in the coming year. Again, many researchers have linked low interest rates with exacerbating inequality. So many of the trends that we've discussed so far are likely going to be amplified even more. Interestingly, the recent crypto market that we've had has occurred while the Fed was pursuing a policy of quantitative tightening. Now, Benjamin Cowan has popularized some of these charts, but interestingly, the crypto bear market of 2018 coincided with a period of QT as well. Miraculously, BTC is up almost 7x since early 2023, while quantitative tightening has been happening. Obviously, alts, especially if you measure them in BTC terms, have not fared so well. Fortunately, Jerome Powell has signaled a pause to QT last week. So I think it's an early signal of the final and most parabolic period of the bull market that, in my opinion, is yet to come. The gold price has been skyrocketing over the past several months and frankly, several years. I think this is telling us several things. This is telling us that distrust between nations is increasing. It's telling us that distrust between people and their respective nations is also increasing. And it is also telling us that investors are updating, aka increasing, their perceived probability of the intensity of the great power conflict to continue. So, like I've already mentioned, the current generation, in many ways, will be the first one whose lives will be harder than previous generations. Like, the whole point of evolution is for the people to be stronger, to be better, and to live increasingly comfortable lives. In many ways, the youth of today, their lives will be harder than the youths of their parents, right? Again, like I've mentioned in my previous presentations, this 1980 to 2010 period was a one-of-a-kind unique period of consistently decreasing interest rates, of rapid economic growth, of rapid globalization, rapid financialization. And this has resulted in tremendous economic growth. But many believe that essentially the coming decades are not necessarily going to be as rosy as the 1980s to 2010s. Switching away from economic issues to discuss some social and cultural issues. Social media addiction is rising. You can see this in numerous charts. You can see this in Google search queries. The issue with late capitalism, in my opinion, is that it ultimately devolves into addiction engineering. Why? Because the more addicted they make their customers, the more predictable their cash flows become. And the more predictable their cash flows become, the higher their stock prices. Again, smartphone addictions are up, and this is widely reported all over the world. We are in the early period of increased slopification of the internet. Generative AI has made it so that everybody can create this AI slop. It's been taking over the internet, and I believe that ultimately it will be everywhere. Internet penetration is obviously continuing to increase everywhere. It will ultimately be at 100%. Similarly with smartphones, they will ultimately reach 8 billion users and reach 100% also. Over the past several decades, we've seen a decline in the percentage of time spent outside, especially compared to 1980s. At the same time, we've seen an increase in the percentage of time spent online. People are spending greater and greater percentage of their day-to-day lives on the internet and on their devices. We're seeing a decline in the trust in global institutions. It's down significantly since the 1980s. Higher percentage of people are reporting distrust in public's political wisdom. And you can't talk about trends without talking about demographic changes. We are going to be seeing a much greater amount of people that are age 60 or older, both in relative terms and in absolute terms. We're also seeing what some are referring to as a gerontocracy. 30, 40 years ago, the average senator was 50 years old. Right now, they're 65 years old. And Western countries are increasingly being ruled by older people. This, in my opinion, is one of the factors leading to a rising tension between the old and the young. And again, there's more evidence saying that people that are older, they've disproportionately benefited from economic growth over the past 40 years, while the wealth of younger people has actually decreased. This is another factor which is going to be driving tensions between the old and the young, in my opinion. And even though this is an extreme example, somebody ran a poll regarding the United Healthcare CEO killing and whether certain demographics find it acceptable or unacceptable. Even though I personally find it unacceptable, it's very interesting to see how the majority of Zoomers effectively found this acceptable, while older generations found it unacceptable. Even though this is an extreme example, it serves to show just how frustrated and in many cases desperate the Zoomers have become. Younger people, Zoomers, Zillennials, Millennials, they're much more likely to be far left or far right compared to the Boomers that are much more likely to simply be in the political center. And essentially my theory is that the more difficult it is for a younger person to form a family, to find a house, to find a good job, the more attractive these radical political beliefs are going to be to them. There's a rising percentage of people living alone. The share of adults living alone has nearly doubled over the past 50 years. We've seen a massive decline in family formation. In 1967, almost 83% of the people reported living with a spouse. Today, this number is lower than 37%. More and more people are living alone or with their parents. The number of marriages is down significantly. Americans are getting married older than ever. Marriage rates are down over the past half a century as well. Childlessness is on the rise. Percentage of women that are childless has been steadily climbing over the past several decades. People are having kids older whenever they're having them, and women are having fewer children in general. Fertility rates are down significantly since the 1960s. And again, this is an issue not only in the developed world, but really all over the world. The number of people having sex is decreasing. Young male virginity is on the rise. It was at 27% in 2018, and this number is even higher in 2025. And again, this is affecting both men and women. I would argue that society, due to inflationary effects, is becoming more degenerate. You can see this all over social media. You can see this in people doing increasingly crazy things online, whether it's for a quick buck, for clout. I'm sure you guys are seeing many more examples of this as well. We're seeing a rise of hyper gambling. Lottery ticket sales are up. Online gambling market is up parabolically. Sports betting markets are up parabolically. And the number of crypto tokens is up from 100,000 in 2021 to almost 17 million in the summer of 2025. And essentially, these are proxy signals that people are becoming increasingly desperate. You can see this in the growth of zero-day options as well. Society is also becoming more polarized. You can see this in the political divides. You can see this in the gender divides. You can see this in generational divides that we have already discussed. You can see this in the Senate and in the House as well. Ultimately, research has shown that the more unequal the society becomes, the more polarized it becomes, as sort of radical far left and far right ideas become increasingly attractive to desperate people. We've seen the decline of community. Church membership is down on long time frames. There's massive declines in friendships. Fewer Americans today report having a best friend, and people are not drinking, not going on dates, not driving, having fewer jobs. And the amount of time that people spend going out is down tremendously since 1990s also. People are significantly more lonely. The amount of time people spend with friends, again, is down significantly since 2000. The loneliness epidemic, various loneliness-related search terms are up significantly in the last 20 years. COVID has intensified this even more. And I believe technology is predominantly to blame for this, but there are definitely other reasons also. Gen Z is very lonely. And ultimately, all of this serves to cause a rise in unhappiness and an increase in mental health issues. More teenagers are experiencing depression. More people are expressing anxiety. And you can see that this is disproportionately affecting young people again. And a higher and higher proportion of students since the year 2010 is reporting having a mental health condition. These are some of the trends that are happening in the world right now. Do comment about trends that I might have missed that you think are important. In the coming videos, we'll discuss the various emotions and the various behaviors that these trends are likely to cause. Ultimately, I believe it's very important to understand what trends are happening right now in order to try to predict the future and to predict what people are going to do and what's going to happen in the world.